Are we about to see the biggest stock market crash in recorded history? It's certainly a confusing time for all investors right now. On one hand, we have experts saying we're in the biggest bubble of all time and the biggest stock market crash is about to happen. And just know, if the stock market crashes, then the crypto market will crash even harder. And then on the other hand, we have some reputable experts saying that there's nothing to worry about, and in fact, we could be seeing exponential growth from here. So the question is, who is right and what is an investor to do? And so in this video, we'll be taking a look at what the biggest bears have to say, including Michael Burry and Jeremy Grantham. We'll then take a look at the counter arguments from Ray Dalio and Cathie Wood. And then we'll finish up with how an investor can win in either direction, and also some actionable insights on how to prepare for a market crash. As always, if you do find anything useful in the video, then drop a like, always appreciated. Okay, to give some context, let's take a look at the current valuation of the US stock market. As you can see, it is beginning to go exponential, and it really doesn't surprise me that many people are calling for a big crash. Okay, so let's start with the bears, and one of the most famous is Michael Burry, made famous from the Hollywood film The Big Short. Take a look. Now, Michael Burry doesn't really make media appearances, but he is a fan of Twitter. People always ask me what is going on in the markets. It is simple. Greatest speculative bubble of all time in all things, by 2 orders of magnitude. More recently, all hype speculation is doing is drawing in retail investors before the mother of all crashes. When crypto falls from trillions, meme stocks fall from tens of billions, Main Street losses will approach the size of countries. History ain't changed. So as you can see, Michael Burry's stance is pretty clear, and he didn't just state this is a little overvalued, he said that this is one of the greatest speculative bubbles of all time. Okay, next up we have Jeremy Grantham, Harvard educated, and his investment firm GMO has over 100 billion of assets under management. A very respected individual in the investment world, and here is what he had to say just last week. Take a look.
And this time, we're really playing with fire, because this time, unlike 2000, we have an overpriced bond market. Jim Grant would argue the most overpriced in 4,000 years.
Right.
We have, in my opinion, and that of many other bubble students, the most overpriced US equity market in history. We have a housing market that 3 weeks ago reached the same multiple of median family income as it did in 2006 at the peak of the housing bubble. And we have commodities that have recently run amok, so that the Goldman Sachs index of non-energy, which is food and metals, which are pretty important, have just equaled the peak of 2011, which was said to be one of those super cycle commodity events. So
Right.
This is the first time we've ever risked 3.5 asset classes bubbling at the same time. If and when we reach a period of pessimism, the potential unraveling in terms of perceived wealth is much greater this time than it will have ever been before.
So, Michael Burry and Jeremy Grantham are very well respected, and they are very clear on their positions. We are in the mother of all bubbles, and the greatest crash in recorded history is coming our way. Now, if everyone agreed, then we could begin preparing ourselves accordingly. However, what makes it confusing to investors is that we have other big reputable investors saying that there's nothing to worry about. And in fact, we could be seeing some of the biggest gains over the next few years. First up, we have Ray Dalio, a super successful billionaire and one of the most respected investors of all time. And here is what Ray had to say last week.
I was asked to talk about bubbles. You know, is the market in a bubble, stock market in a bubble, what's in a bubble? And I just wanted to give you some thoughts about that. A bunch of years ago, I started to think about, well, what is a bubble? What do I mean when I have a bubble? Because I watched a lot of bubbles over my something like 50 years of investing. And I basically thought there were 6 things that made a bubble in my mind, and I'm going to rattle them off, then I'll apply them so that you know what I think. First, how high are prices relative to the traditional measures?
Now, I will link to the full video of Ray Dalio below, but for now, here is the 1-minute version. Essentially, there are 6 things to look for from a market bubble. Number 1, prices are high relative to traditional measures. Prices are discounting unsustainable conditions. Lots of new buyers have entered the market. There is broad bullish sentiment. Purchases are being financed by high leverage, and buyers and businesses have made extended forward purchases. And as you can see, the build up to the 1929 crash, nearly everything was signaling bubble. The dot-com crash, everything was signaling bubble territory. The build up to the 2008 great financial crisis, interestingly, only a couple were flashing bubble. But here is the biggest takeaway. This is today's total market, and not one of the indicators from Ray Dalio is signaling a bubble. So, according to Ray Dalio, one of the most respected investors in the world, no bubble. And finally, we have Cathie Wood, one of the top fund managers in the world. ARK Invest now manages over $50 billion of assets under management, and here is what Cathie Wood thinks about this bubble.
First of all, I'm thinking of our clients every day, all day, and truth be told, all of my IRA is in our funds and GBTC, which is the only way I can gain exposure to crypto, or at least Bitcoin there. So I'm in there with you. We're aligned. We're on the same team. That's great. But the other question, are we in a bubble? I do not believe so. And I am very happy that many people are worrying that we're in a bubble. I experienced the late 90s bubble, and yeah, the value investors out there were really worried, and they think they're going to have their day in the sun again because they did so well during the tech and telecom bust. I don't think that's the case now. I think that the seeds for what we're experiencing now were planted back then. Too much capital chased those opportunities too soon, after there were too few opportunities, and the technologies weren't right. The costs were way too high. We're at prime time for those 5 platforms now and those 14 technologies. And we've just begun, and they're going to be very disruptive and maybe destructive to a lot of value spaces. Not everyone, but anyone looking at price to book, watch out for that book. It may disappear because of disruptive innovation. Anyone looking at that high dividend yield saying, I got to hold on to the stock, be suspicious of high dividend yields if that company is in harm's way.
So, as you can see, it is a very confusing time for investors right now. So the main question becomes, what should investors do? Should we sell everything up and move to Fiji, or should we just carry on as normal? Well, I didn't want to finish this video without any guidance. So for anyone interested, here is how I'm thinking about investing in these uncertain times. Although crashes can seem very daunting, as no one wants to give up all of the gains that they've made over the last few years, crashes do also give some of the best investment opportunities that you'll ever get. If you can buy something valuable at a 50% discount, then they will be some of the best investments you will ever make. And I think the key is to have a plan where you can win in either direction, up or down. So how do we do this? Well, now is the time to be building up a good cash position. And yes, even in times of inflation. Inflation can wipe off 3 to 5%, but crashes can wipe off 50 to 80%. A good benchmark for a cash position would be between 10% and 30%. Now, 10% is what Warren Buffett has advised for many years, but just now, Warren Buffett and Berkshire Hathaway has closer to 30% right now. And this is cash ready to deploy if the market crashes. And number 2 would be to take advantage of the proven strategy of dollar cost averaging. And this way, as the market falls, you are buying in at ever cheaper prices. And the mindset is to see this as everything getting cheaper, not that you keep losing money. So you will need a longer time horizon. So that is how you win from falling prices, and by keeping most of your money invested, that is how you win if the market continues to go up. Now, the biggest problem people may run into is if they need the money in the short term. So, depending on the size and complexity of your portfolio, you may also need to see a certified financial planner or fiduciary. So, there you are, guys. We certainly are living in unprecedented times, but always remember, crashes also give some of the best investment opportunities we will ever get. Just to say then, if you did find anything useful in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.